But Probal Sen joins us. He's, of course, the Vice President Equity Research at ICICI Securities, has been tracking oil and gas space for a very long time now. Probal, hi, good to be speaking with you. Well, the crude prices have seen quite a bit of dip and has come a bit suddenly, right, from those $80 per barrel mark now down to 76. How much would have marketing margins increased? Is this something which is going to have a bit more, structural impact, you think, in terms of the earnings?
Yeah, absolutely. I think if we look at the last week itself, blended retail margins have actually gone up to the levels of around 7 odd rupees, if our calculations are correct, which is almost 2.5 to 3 rupees higher compared to the 1Q average levels that we saw. So definitely the softness in crude is having an impact. In fact, at the same time, even refining margins have actually improved. If we look at the average levels of GRMs in the first couple of months of this quarter, average margins are also actually trending up by about $1.5 to $2 in an average versus what Singapore benchmarks were in 1Q. So to that extent, I think the prospects for the OMCs continue to get stronger. Yes, LPG losses, which have gone up, which spoiled the 1Q results, I think remains an uncertainty in terms of how they will be compensated for. But if marketing margins other than LPG continue to be this strong, I think earnings will probably continue to see upsides across the street, as we go along for the rest of the year.
Earnings will continue to see upside. Will there be further upside on stock prices as well? Because the entire sector has re-rated very sharply. I'm not sure whether earnings are yet to catch up or the valuations are yet to catch up. Which way are you looking at things?
No, I think, as I said, marketing margins typically people tend to build in normalized margin levels, or almost all, without fault for 1 year forward levels. But if we look at the way crude prices are behaving, if we look at the way demand estimates continue to sort of see a little bit of more of a softness, there's a wide variance, one has to say, between the different organizations tracking it. OPEC is probably still closer to about 2 million barrels a day of demand for the next 12 months, whereas IEA is as low as 0.7, 0.8 million barrels. So there's a wide divergence in terms of what demand growth estimates are. Having said that, majority of opinions tend to be on the bearish side at this point of time. So if crude remains, even at about 80 odd levels, I think that is a comfortable level for marketing margins to trend higher. And I think that is what is the important thing. So the stocks will, I think, follow the trend in terms of earnings upgrades, which is something that we'll have to keep a watch on. But that is the direction in which earnings seem to be moving in our opinion.
Right, Probal, good afternoon. This is Vinny joining in the conversation as well. Just
Hi.
one point that right now I was just looking at those valuations, right, for IOC, BPCL, HPCL. The EV to EBITDA right now, 12 months forward, is somewhere close to that 5-year average already, the 5-year average of EV EBITDA. Then, does this still merit in terms of, overall seeing a better move coming in, or, that is also a re-rating that you're talking about?
I think that is probably going to be true for a lot of government-owned sectors. If you really look across, that is one structural change that has happened. If you look at how the way multiples have moved for PSU held, sectors, whether it's power, whether it's utilities, and I think the same is probably starting to reflect in the oil and gas sector as well. So looking at it from a historical standpoint, perhaps is not beneficial because they have been undervalued compared to their book value, their asset, and their business for a very long time. Having said that, I think the other reason why we need to continue to look at it is that the earnings trajectory and the scale of operations, specifically if I can speak about HPCL, for example, which is adding a significant amount of refining capacity as well as a significant amount of petrochemical capacity. Therefore, the business itself is slated to look very, very different in the next 3 years than it has over the last 5 to 7 years. And therefore, I think a re-rating that can happen is based also on a transformation of the business mix, in addition to whatever is happening in margins. So that's how we are looking at it specifically for HPCL. IOCL and BPCL, my apologies, I can't speak on the ratings of you. They are on our restricted list for compliance reasons.
Does make sense there, but obviously these companies and especially the PSU government-owned side has been something that is undervalued. But given their LPG subsidy, that's remained unchanged also in the final budget, and OMCs have been incurring losses. Do you expect the government to announce a one-time subsidy like that one had seen in FY23? Is that something of a possibility? Okay. Probal, hi. I think we're connected back with Probal.
The
Yes,
connection got dropped there. Can you
Yeah,
hear me?
no worries. So I was just saying that, how in the final budget also the LPG subsidy that we are saying, that has remained unchanged, and now OMCs, they've been incurring these losses. So do you think there's a possibility of a one-time subsidy, that is a likelihood of that, something like we'd seen in FY23?
There is a possibility, and I think the companies alluded to it in the 1Q conference calls as well, when talking about the one-time loss that was there in the numbers in the 1Q results. But that's something that anyways will probably be decided at the end of the year, keeping in mind the overall profitability, whatever happens for overall FY25 profitability. If they are able to make this loss up by higher profits on the refining front as well as on the retail margins front, then I'm not too sure whether there'll be additional compensation coming. So that's a decision that, it's very difficult to take a call on at this time, depending on what the requirement is and what, their financial situation is. I think the government takes a call every year in terms of whether to compensate or not.
Lots really to talk about, but let me quickly pick up on two companies specifically. Petronet LNG, the deal that they've signed with the Sri Lankan company, would that mean the volumes from the Kochi plant are likely to improve, A? And secondly, on Reliance, with the AGM now lined up for the next week, is there anything specific that you're watching out for?
Firstly, on Petronet, yes, the MOU that has been signed, if it actually plays out in terms of actual supplies, definitely opens up more avenues for consumption, for utilization of the Kochi terminal. Having said that, if you look at at least based on what we could find on the internet, the capacity of the power plant is actually about 350 megawatts. It's a combined cycle power plant. Even if we assume that the entire capacity will essentially be consuming gas, that translates to a requirement of not more than 0.3 million tons. So while for Kochi, it is definitely a big positive. It increases the potential utilization by almost 25% compared to the last couple of years where they've been hovering in the 1 to 1.1 million ton arm. It doesn't really change, the EPS too much at this point of time. But yes, I mean, as far as the Kochi terminal's viability is concerned, when you combine this with the additional offtake pipelines that are being basically, the completion of the second leg of the Kochi Bangalore pipeline, then over the next 2 to 3 years, Kochi's utilization should definitely look up. So to that extent, it's an additional small driver, which is a bit of a positive for Kochi. Coming to Reliance, frankly, the Reliance AGM has almost, it's become sort of this blockbuster event every year where we tend to tack on a lot of expectations about, huge announcements that may or may not come. I frankly would not want to hazard a guess. If we look at the annual report very clearly, I think the focus now is starting to shift towards renewable energy milestones. So one would look forward to any specific milestones or timelines around the setting up of additional factories with respect to the 4 legs of their renewable energy journey that they have been basically planning and working on for the last 2 to 3 years. So that would be one. And second, any updates as far as, the unlocking of value of the retail and geo business, which has been a long time coming. I think those are the 2 aspects to probably look forward to in this AGM.
Okay, thank you so much, Probal, for joining in with us this afternoon on ET Now and talking to us about crude and everything related to prices, OMCs, as well as oil and gas sector.
If you like this video, then like, share and subscribe to ET Now.